Huh, that's weird. Oh, does it work now? Does it work now? Can someone tell me if the YouTube works now? Because it'd be cool if it did. It'd be cool if it did. Nothing. God damn it. Let me try this again. Plus audio input character. This is so weird. Add existing. Mic 2. Mic aux. Try mic 2. Check, check, check. Check, check, check. Plus audio input capture. This thing. Let's try that one. Check, check, check. Start just pressing button. Oh, let's see if that one works. See, I'm getting the little audio mixer, audio input capture is going up, but this isn't what was moving yesterday when I did it. Yesterday, what was moving when I did it was mic 2. Mic 2 I added yesterday. So I figured out how to add that into sources. I added mic 2 and it worked. Let me know if it's working again now, if that fixed it with this little audio input capture. Okay. Yeah, it's so weird that I'm connected via different source than I was yesterday. Yesterday was mic 2, this was audio input capture. I don't know what the difference is. I can't figure it out. Now I got someone ringing my doorbell and I'm expecting a package. So hold on one second. Oh man. I realized I left my webcam and my normal microphone. Actually, I actually have two. I have multiple of them, but I brought one of them to Idaho and I shouldn't have, and that was for here, and I left that one there. So I overnighted a webcam thing so I can do the thing with Sammy and JR tomorrow. Yesterday. So hopefully that's what it just arrived. I'm in New York City, so there's a good chance that by the time I finish this afternoon meeting and go check the package, it'll be stolen. Um, and then I won't be able to do the thing anyway. And then on top of that, tomorrow we'll get to figure out a whole nother microphone to try to set up for the afternoon meetings. After today's debacle. All right, let's go to the videotape, as they say. Um, Trump coming out of Fort Bragg. Spies up 0.5%. Huge up 0.65. IWM only up 0.5%. It was the leader all day until we got the rally into the close. TLT up 0.4%. So that actually would have helped the IWM a little bit further today. Dollars up 0.1. Gold's down small. Bitcoin continued after yesterday's huge move. All right. Um, Man, this market is so crazy. So we can circle back to Pat's note from this morning, even though we actually have an updated note that came out during the day. And the reason why I initially was starting the afternoon meeting late was because I was just taking a couple minutes to read that latest Goldman note. There's not too much of an update there on the latest one compared to the one from this morning, and I can't screen share the one from this morning that Pat posted in the afternoon, so I'll just point back to this one. So what we started to see at the end of last week and became our expectation, I talked about this in yesterday's afternoon meeting, was if there's going to be another leg up in the rally, one of the cool things about trading these days and what we as a team have learned over the years is we now not only get to use technical analysis to measure the buying and selling, we get to use data to be able to know where the buying and selling is coming from and to understand how it can lead to different feedback cycles. So we have the systematic buying that's led to the hedge fund stop in. The hedge fund stop in, they have gotten a lot more long, but they didn't get less short. So what you're seeing, I think I talked about this in yesterday's afternoon meeting, is that their gross leverage, which includes their long and short exposure, is massively high right now. I don't remember what percentage, 95% percentile plus. I don't exactly remember the number, but it's massive. Whereas the net leverage had been a little bit tighter because the net leverage is like longs minus shorts. So you almost want to see like the net leverage move higher while the gross leverage move up to indicate that the short squeeze is on. But we already know that the short squeeze is on. It really started last week with the last leg of this market break out. So in the morning note this morning, um, it said that range bound session with a clear slowdown in leadership under the hood. Mega cap tech, the big six, versus non profitable tech is now down 5 days in a row and having its worst 5 day stretch of performance in more than 3 months. Well, guess what? After today, you can add a digit on there. So now we know that mega cap tech is down 6 days in a row versus non profitable tech. So non profitable tech tends to be where the shorts are hiding. They view these companies as companies that don't even make money. A company that doesn't make money in a high interest rate environment is usually not a company that you want to be long. And people have piled into those shorts there. And because people are not believers in the macroeconomic environment, they're not wanting to get rid of their shorts. And honestly, that's the camp I've been in. I've been, running kind of a long short book here, and I have been doing everything I can within reason with risk, and even with that, I've been getting hurt a little bit. I've been doing everything I can to maintain my shorts because, probably like most of these hedge fund participants, I have just not been a believer in the macroeconomic story right now. Though, like I keep saying, be mindful of the technicals because the technicals are the most important thing. So I'm really trying to maintain some shorts. They lose me money basically every day. And with the exception of Thursday last week, where luckily I was short Tesla and Palantir, which both had bad news and both really, really paid. And I was able to make a lot on that day. Thursday kind of saved my butt a little bit, did really, really well. But outside of that, it's just been a big P&L bleed every day trying to maintain these shorts because it's like I don't believe in the macro environment. Guess what? The macro environment doesn't matter. The technicals matter, and the technicals are breaking up, and positioning and market dynamics matter, and those are also pushing us higher. It started with the systematics. The systematics led to the stop in from the funds, and now you're seeing the funds um, get short squeezed. So that's exactly what's happening here. The Mag 7 stocks, the quality names led us higher initially. Now they're not. Now they're weaker. Now the non-profitable short squeeze names, the workhorses, the plugs, the fuel cells, those companies have just been absolutely tearing higher. And now it's starting to set records. This is a market environment of absolute and utter records. And this is a great chart that we reviewed in the morning meeting. This has been an environment of records. Record price action in April, record price action in May, to the downside and the upside, respectively. And now it's giving way to squeezing. So the most short basket rolling 3-month return from Goldman shows these peaks. And this looks great because this shows what I was talking about in yesterday's afternoon meeting. Yesterday's afternoon meeting, I spent some time talking about these like late cycle short squeeze rallies where the crappiest stocks start to really rally. But we just don't know how long they can last. And obviously, we had this late 2020, early 2021 period, which this chart shows me is the biggest squeeze period for short stocks, like which I guess makes sense when you think about what happened with GameStop ever, basically. This chart look back goes back to 1995, so it doesn't include all of history, but it includes the dot-com bubble. So huge squeeze there, and then I very specifically remember this August 2022 squeeze where all those stocks started going again, and we viewed it as a signal that we were closer to the end than the beginning, and that is what happened. But again, you never know how long they're going to last. It also marks February 2024 as one of those. And then there's other little dots here of squeezes that you can see in this chart in recent times that aren't necessarily noted in the chart, but they circle back to what I was saying yesterday, where, you know, after January 2021, there's probably, there's two that are marked, but one, two, three, four, five. It looks like there have been five of these kind of major short squeezes since that huge bubble that we had that burst in the beginning of 2021. And every single time, those five squeezes since that period have been the end of the cycle, and then we get a bigger market pullback. Not a bear market necessarily, obviously, but it really kind of ends the buy cycle. So I'm expecting the same thing to happen here. The thing is that you don't know how long that squeeze can last. That squeeze could last for a few days, a few weeks. In the case of the late 2021 period, a few months, where these stocks can just go and go and go and go and continue to squeeze. And if you read the Goldman note from yesterday, it basically says that I'm trying to see where that exact language was right here. Despite this, we are not yet at aggressive squeeze territory. We're not yet at aggressive squeeze territory. So this is what they're labeling as aggressive squeeze territory. And you can see this current uptick, which is going to be higher after today. But we're not yet at full aggressive squeeze territory. We don't have to get there either. It doesn't have to happen. Though when you look at hedge fund positioning, and you think about how the market likes to give the maximum pain to the maximum amount of people, it looks like we probably will get there, barring some sort of macro event that puts a stop on this market. It looks like we're going to continue to squeeze those names specifically. And then if you go to the note, which I can't pull up on my screen share chart, but Pat posted it at 3:54 p.m. Um, it basically it talks about something interesting about how hedge funds are just getting smoked this year, which we kind of already know. They got absolutely destroyed in the market pullback. And the note here says March 7th and March 10th are two trading sessions I continue to circle back to as the worst back to back P&L destruction slash de-risking days for a major portion of the hedge fund community that I can recall witnessing. I am starting to feel some similar tremors underneath the surface in terms of the recent price action. It's important to note little to no panic in terms of trading activity on our desk. The difference is this now is to the upside. Last time it was to the downside. So it's getting really painful for these funds who, like me, have been trying to stick with some of these shorts, and they're starting to squeeze in this leg of the rally, which I do think will be the last leg before we see some degree of a more macro pull. But timing on that is pretty much impossible. We can't know it today without a crystal ball, which I don't think any of you have. Josh might have one. But Otherwise, the technicals will tell us, which that's even as I have these swing shorts on that I've been trying to maintain as more of like a long portfolio approach to active trading that I like to implement. Um, I've been trying to say to you guys every single day, like, don't do that. Don't just have those shorts on because you've got that macroeconomic thesis. Let the market come to you. We will get a signal at some point if this market's going to go down, and you can press the market lower when that actually comes. I know right now attempting to press this market downside in any scenario has only hurt us for weeks. But there will come a time where we will close with a nasty negative Maribosi or something like that, a day to take notice of, that becomes the beginning of the end that trades us lower. But I can't tell you when that's going to be. Tomorrow, after OPEX, August, I don't know. Um, We'll see. I would note though that the Goldman note from midday today is also expecting the economic picture to deteriorate. However, this is what it says. However, ultimately, our house economic view is that the U.S. economic data will indeed get worse over the summer. So this squeeze should be temporary. But again, what is temporary? Is temporary a month? It's temporary a few more days. It's hard to say. We're not in the extreme short squeeze territory yet, per the note that I was reading from this morning out loud just now. So yeah, I mean, we will we'll see how that evolves over time. But we got the CPI tomorrow. It could act as a catalyst if it comes out hot, but it seems like the whisper number is actually the opposite, that it's going to come out potentially light, which is bullish, by the way. And in that situation, Goldman is expecting the IWM to really lead the charge again tomorrow on a light CPI. So we'll see tomorrow if that happens. We'll see how we squeeze. The spies will benefit no matter what, as long as something's going up. From a trading perspective today, some of these stocks are just getting so silly. It's interesting to see how like Nvidia, I know it had a nice big green day today, but it feels like Nvidia's been struggling to continue a little bit. It feels like it really wasn't until the close that it started to go. It feels like our early leaders of this rally, the stocks that were leading first in April and May, are really slowing down, and it's other names that have taken over. Some of those are those, short stocks, those fuel cells of the world. Some of them are more quality companies like Micron. But the move is just getting silly here at this point. Micron's been up like 2 to 5% every day so far this month. And this is not really a momentum stock like this. I know it's a semiconductor related name, so it can absolutely move. But this move from 95 to 115 over the course of 7 trading sessions is really starting to get crazy. It's starting to go parabolic. It's totally elevated away from the 80 EMA, the 21 EMA. There's extreme extension here. I do think that this should be on the radar for an RDR tomorrow. ON also is similar but different, just absolutely on a a tear on semiconductors here, just up huge. And again, it's not that Nvidia is not going; it's just not doing what those are doing. AMD still looking great, continuing higher. It's kind of somewhere in between, not trading as well as Micron, but trading better than Nvidia. And Nvidia is not trading bad. Probably the worst one has been this SMCI, just continuing to not really participate. $44 has been a big resistance level. But yeah, these semiconductors are on fire. I mean, Intel yesterday morning, it tried to go and then it failed back down a little bit. And then today, just Intel had a monster move. So if you are kind of managing a more portfolio of positions on both sides of the market, I do think that you should view this short squeeze activity that we're looking at as late stage, and you should be using it as an opportunity to book profit in the longs that you're in. When I have stocks right now that are getting to targets, and I've had a handful of them recently do that on long trades, where I'm getting out of them at my target, I'm not jumping back into them right now because it just feels so light cycle. And a lot of times in normal environment, I'd be buying back in on these stocks relatively quickly on dips. I'm not doing that. Like I got out of Unity at 28. I'm not jumping back in. Yesterday I got out of SPIR at like 1250. I'm not jumping right back in. I got out of AMD at 120. I'm not jumping right back in. I got out of Google into 180 today. I'm not jumping right back in. So I am using this as an opportunity to actually reduce further on the longs I have because it feels like cycle trying to manage the shorts. I'm not adding any additional risk really on the short side right now. I'm just doing what I can to kind of manage what I have open and try to maintain it as best as I can in an upward move, which is requiring me to take some small losses here in some of them, but I'm really trying to do that in a fairly limited way just because it feels so late cycle to me. And I'll be fine even if we could just go sideways. It's just the constant squeezing that's a lot more difficult. But yeah, I mean that's just where we're at. I don't really have anything else to talk about. I didn't do any real specific day trading today. I feel like I was all over the place today. I had a couple errands to run around town here, which took longer than they should have, and just was catching up on a few things. But yeah, it's pretty much it. Don't really have anything else for you guys. I'm happy to answer any questions. It's just the current state of the environment that we're in right now. So if anybody's got any questions, feel free to post them. Not seeing anything in the VTF for now, so I will pop over to the YouTube. I'll see what's going on over there. Thanks everyone who was helping me out on the YouTube with the sound. Hopefully that works again tomorrow. Again, it's especially hard when I'm only on two screens because I couldn't even see what you guys were saying, but I really appreciate it. From Gabriel, oh, SoFi, that's another one that I'm out of. I like SoFi. I don't have a position in it anymore. I'm not rushing back in on things. I know you like SoFi. Look at the chart. Looks really good. Inverse head and shoulders. 3 days of tight price action. Um, yeah, for sure. So I like SoFi a lot. I think it looks great. Agree with you. It's worth keeping an eye on. Long verse 14 looks good. Long through 1450 for continuation. Also, why keep the shorts when the market keeps pushing higher? Even if we do get a pullback, if we go higher between now and then the risk reward will get worse. And when the pullback does get there, the move, I guess is the only question. Look, I've been asked this question before. It's definitely been a tough environment to be short, and I'll just circle back to my go-to answer on that. Um, the most important thing for me in trading is not making money. The most important thing for me in trading is following my game plans because my game plans are what actually make me money. I have game plans already in place for the shorts that I have on. I'm gonna follow them, do or die. That's the way that I trade. And I occasionally, and this has been this way recently, run into situations where I have a trade on, and as information changes or my thought process adjusts, I think that my trade is wrong or early or something like that. And what I do in those situations is nothing. I continue to follow the game plan for the trade that I have on, and I should have done a better job with the original analysis. I believe that I am not a good enough of a trader to make changes on the fly to my game plans and be able to stay consistently profitable. So I would rather lose money in those situations than change my game plan on the fly and have that become a habit. And I think from a trading psychology perspective, um, if you were the ideal perfect trader, who I've never met, if you were the ideal perfect trader, every single time the slightest tick changed, you would change what you're doing and you'd be able to buy every pivot low and sell every pivot high and be that good. I haven't met that person, and I know for sure I'm not that person. I am not a perfect trader. I make money, I lose money. I like to think I make more money than I lose, but I definitely have periods of time and individual trades, especially where I lose money. And I follow my game plans, and that's pretty much it because I think it's a slippery slope to have trades on and then change your game plan mid trade, because it's so easy if anyone tells me any trade, I can find a reason why it should fail. And from a trading psychology perspective, when you have a trade on and real P&L is moving and real money is moving, it is just so easy to say to yourself, "Oh, you overly focus basically on the reason why the trade should fail, and you get blindsided to all the reasons why the trade should work." And what that ends up doing for you in the long run is you end up not making money because every time trades are beginning to work, you're getting out of them too quickly, and it can also lead to risk management issues where you're holding them for too long against you. So, I have known for quite some time that my shorts were probably too early. This move higher, while I was expecting it, came further than I expected it would. At least I have had longs on, which are getting further reduced. Like I just said, I just named a handful of stocks that I'm out of on the long side and have not gotten back in. I'm not rushing back in. So I guess I'm actually in some ways continuing to get a little bit more net short even as we move higher here. But I'm not really adding to my shorts right now either. I'm just kind of getting out of longs still further into this move, and that's pretty much it. The trades are already on. They're already game planned. So if I make money in them, great. If I lose money in them, it sucks. But it just is what it is. And that's how I trade. And I think that when I point if I can point to most people who do not make money consistently in this business, most of the time it's because they fail to follow their game plans consistently. So for me, if most of the time following my game plans means that I can make money consistently, and once in a while following my game plan means that I lose more than I should have otherwise, I'll do that. I'll do that all the time. Um, so I hope that helps. From Cyril, the moves today around trade talks were insane. Yeah, I mean, I don't even know the market today. I don't even know what was going on. We downticked really hard at 11:30 for like 3 minutes because of an Iran headline. Then we V-bottomed that. Then we randomly downticked to 2 o'clock. I have no idea why. I didn't see any headline on that. There was a very large VIX spike that was real. Don't know what happened, if someone fat fingered, or I have no idea what happened. But that V-bottomed as well. And then on like a headline that was like a non-headline, we started ripping into the end of the day. Basically, just like we're gonna convene again a little bit later today for more trade talks. They're going well. That's all they said, which was kind of nothing, and it was enough to rip the market higher. But that's the environment that we're in. The environment that we're in is, um, the environment that we're in is an environment where bad news doesn't bring us down, and good news that isn't even necessarily good news brings us up. From Robert, can you elaborate a little bit about yesterday's comment why this situation could be beneficial for Musk and Tesla? I'm not sure what you're referring to around why's comment. I assume that means yesterday's comment, why the situation could be beneficial for Musk and Tesla. I need you to give me more information, Robert. I'm not sure whose comment you're referring to, if it was a comment I made or if it was something else. Happy to circle back on it. From Chris. You don't think it's a good idea to exit a trade if news comes out mid trade? I don't do that. Regardless if it's gone to target, if it goes to your stop, then yeah, for sure, you have a stop. If you have a stop, if your game plan calls for you to have a stop, you get out when the stock hits your stop. It doesn't matter if it's news or otherwise. Um, and if it's gone to your target, you should also get out of the trade. So, I yeah, I don't know. I feel like you're asking me a question that is very different than what I was talking about just before. I think that if you have a target and it gets to your target, you get out of your trade. I think if you have a stop and it gets to your stop, you get out of your trade. That's what your game plan called for. If your game plan says to exit, then you should exit. But I don't. If it doesn't, if I'm already in a trade with a game plan with, let's say, a target and a stop loss, and news comes out, but the news doesn't move it to my target and my stop loss, I don't get out. I just book profit or add to the position or whatever else. Um, Back to Robert's question, why it could be beneficial for Musk and Tesla. Oh, so basically what I was saying yesterday, was in the short run, this is just my opinion, but I'll say my opinion because it would influence the stock. In the short run, I think that Donald Trump is incentivized publicly to play down the Elon Musk thing. It looked really bad. It made him look really bad. The Epstein thing looked really bad. The fight itself looked really bad. Like all aspects of it, I think were deteriorated Donald Trump's agenda. So the best thing for him to do is appease him at least publicly, and the market will move though on what is done publicly, so that benefits the stock. And I think that at the same time, I don't think that Trump forgets stuff like that. So what I think he would end up doing is publicly make amends, which means that Tesla would move higher, but privately be like, hey, we got to do some things to move away from this guy's businesses. But because it's happening under the surface, it's happening privately, you won't see it in today's price action. You would see it at the end of the quarter, 2 quarters from now, when profit or revenue declines because at SpaceX because they didn't get the same contract that they would have gotten otherwise. So that's kind of what I was saying yesterday, and that would be my thought process on this. The Tesla move today is pretty crazy, though. Tesla has now 100% negated Thursday's move, which to me doesn't make any sense, but a lot of things make sense about this market. 330 is a huge level. That 330 to 333 level is huge for the stock. So uh, we'll see how that one goes. All right, cool. Got through the YouTube there, popping back over to the VTF. Um, they have poker with margin on Robinhood. It's kind of crazy. It's a gambling website, not a trading website. That's what it looks like. On these big sell-offs, are you interested in going long, especially with this market? And if so, what would be your signal? Not really, just because of my more macro view. I think that so this is kind of what I was saying at one point during the day. Right now, we're in an environment where every single market downtick is running into a bid that gets bought right back up. That's going to change at some point. I don't know when, but there's going to become a day when one of these market sell-offs, like what we had today at 11:30 or what we had today at 2 o'clock, happens and then continues, and then there's a little bounce back, which is met with a lower high that leads to a lower low, which has not happened, right? Literally every single negative piece of news that has led to a market downtick for 2 weeks now hasn't been able to last for more than 15 minutes before V bottoming. There will be a day when um, the retracement gets met with selling at lower prices that leads to a lower low. And what I don't want to do, honestly, is get in the habit now at this point when I feel like we're becoming late cycle, even though the technicals still confirm higher price action. What I don't want to do right now is get in the habit of honestly buying every one of these little dips. I do have game plans which are having me buy them. I would note that. I'm not doing it with new trades, but into these pullbacks, um, I'm buying stock. Anything that I'm long, you are seeing me. I'm trying to find some examples, but basically anything that I'm long, I am buying into those downticks. So I'm getting a little bit heavier on my longs. Anything I'm short, I'm getting covers in those downticks. So I am buying those downticks. I'm just not doing anything new into them because I do think that at a certain point the down move is going to lead to a bigger down move, and that's going to be where the real P&L comes from. Big P&L comes from capturing big moves on size. So while I don't mind adding small to the longs that I already have open or covering small to the shorts I have open into those down moves, I don't want to be doing it with new trades or doing it with new trades that I get stuck in when the real down move occurs, or um, covering so much of my shorts into these small down moves that when the big move actually occurs, I don't make any money on it. So that is kind of where my head's at on things. Um, so yeah. Let me read. I see Dave has a question, but there's a lot more Liam commentary. So let me continue with the Liam commentary, and then I'll circle back to Dave. Find myself wanting to wait for some type of confirmation the selling is over, but then the next bar would be a big Maribozu, and then I tell myself, well, I am too late because the risk will be too large. With the 205 Q candle, which is an inside bar, and then you get two inside bars in a row. With the spies you did. Yeah, Q's the same thing, two inside bars in a row. Uh, will the 205 Q candle or 210 Q candle be long? It is. It's an inside and up. It's inside and up. You can go long and use the low of the inside bar. And that is one of my favorite ways in which a negative mirror. I said this in the morning meeting today, referencing Palantir's daily chart. One of my favorite ways in which a negative Maribozu can get negated is through an inside and up. You can see that on Palantir's chart, or guess what? You can see it with the market twice today. Inside and up in the Qs at 11:35 leads to a negation. Inside and up, really two inside bars in a row and up at 210 leads to a negation in the move. Those are tradable setups. Most of the time, when you get these types of down moves, they don't give V bottoms and immediately get back above the high of the starting point. So, one thing that you want to be careful if you are a new trader is developing like a recency bias where the trading that you've seen most recently is all you know. I mean, that's kind of how trading works when you're new. Um, but think that that's necessarily normal or necessarily always works that way. Most of the time, it doesn't. Most of the time, if you get a huge volume bar like this, while it can reverse higher, and again, an inside and up is one of my favorite ways to reverse higher, probably more often than that, you get new lows, not a full negation of the candle, as what happens next. But that has not been the situation recently, as we keep discussing. I think you could use the inside bar low as your stop on that, or I would use the furthest pivot low. I probably would use one of those two as a stop loss. What kind of catalyst do you think could create that where we sell off and we don't get back up? Just seems like we shake everything off. Nuclear war? Nothing. Literally nothing. Um, it doesn't matter. I feel like what the catalyst is right now, honestly. It needs to be a catalyst hitting timed with the right market dynamics, and that might require us to get through OpEx. Um, or get it at least into OpEx week, which is next week. It's the quarterly OpEx. We got to get into uh, next week's OpEx in order to maybe have the week loosen us up a little bit, kind of front running a little bit of OpEx itself. This is a market problem, less so than a catalyst problem right now, in my opinion. So it's not necessarily the catalyst. I mean, if you got a big enough of a catalyst, it can overwhelm market structure. But I think that this is a market structure problem. If you can get a big enough of a catalyst to open up to override market structure, you get a very, very, very big move. But I honestly think in that regard, the risk is more up than down. Would you wait for the inside and up to close? Or I sometimes cheat it. Technically, you should wait for it to close and buy the break of the next bar higher, like on this 210Q candle, you should be buying it on the 215 bar at the high of the last bar with the stop with the low at the previous one. I will sometimes cheat it if I have reason to think it will break up. Yeah, I would still probably use the low of the bar, or I might do two stops. I'm gonna use the low of the bar and the absolute low. Back up to Dave's question. Dave S. Any reason why the mornings have been garbage price action, but we get these great moves in the afternoon? Funny, I almost feel like it's the literal opposite. I've been preferring the morning price action to the afternoon price action. I felt like we ran into that call wall all this morning and everything was full chop. Yeah, today was particularly weird. I forgot about that in the beginning of the day. We like started with this upside tail, bar closed on lows. Next bar we made new high. I think it was even weirder than spies, right? Yeah. Upside tail. Then the next bar breaks the high of the first bar's upside tail. Then the next bar gives us new lows. And then 2 bars later gives us new highs, but no follow through. That was like crazy in the beginning of the day. We were all over the place. I really didn't know which way we were going to settle. But overall, I feel like it's been easier for us to move down in the beginning of the day than it has in the end of the day. The beginning of the day, it's like you're getting more like institutional selling or something that's coming in, and then by 10:30, it's like the corporate buybacks are just buying. And I read part of, I didn't get to finish it, the latest Charlie McGilligan note that came out today, and a lot of what I did read on that note, by the way, first of all, it echoes exactly what the Goldman note is saying, where it's like the more immediate risk is to the upside, but then the bigger risk that it's like up and then down, basically, is what I feel like I'm reading from both Goldman and Nomura right now. They're both saying up and then down, risk is to the upside and then to the downside. We've got to squeeze people further before we can actually get the downside. Um, but one of the interesting things that was brought up that I did get to read in that latest No More with Charlie McGilligan note is how perversely the macroeconomic uncertainty for companies and not knowing what they should be doing because they're not knowing the price of their inputs is actually causing them to initiate even more stock buybacks than they would have otherwise, which the buybacks have been huge right now. And they're like, well, we don't know what's going on. There's a lot of uncertainty. So instead of spending cash on R&D or anything else, let's just take our extra cash and put it towards stock buybacks. And according to that note, I didn't know this, those buybacks become more active into dips. So on those dips that we've been seeing over the course of the last 2 weeks, the corporate buyback bid has really been stepping in on those bids, as has retail. So it's acting as like a degree of like synthetic positive gamma on the downside that is enabling a lot of those dips to get bought because, again, perversely, additional corporate uncertainty is creating a further bull market because they're just rotating more cash towards corporate buybacks, which is kind of crazy. So, anyway, uh, from Gus, crazy Tesla effects on Trump retaliation will be seen in the next few quarters. Energy EVs with no subsidies. Yeah, we'll see. They got, Tesla also, even though I think it's a non-event at this point, got a boost from getting its first couple robo taxis on the ground. I mean, this has been a known event for months. It's not new, and they got like 10 cars moving. Um, but they got a boost from it all the same. Boom Rich, the first 15-minute tail was pretty significant. Yeah, today. Yeah, we started with two big upside tails in a row on the spies, two big upside tails in a row in the Qs as well. Then we broke up. Good stuff, Liam. Um, AMD's having an event on June 12th. Thank you. It's good information, Eddie. Back over to the YouTube to see if there's anything new over there. From Kevin G. On a side note, what do you think of moving to New York or a trading state? Are there any benefits for networking, edge, etc.? Please share your thoughts. The only traders in Atlanta are all scammers. The trading states have higher taxes. So that would be the first downside that I would point to. It's one of the reasons why I've now changed my permanent address to Idaho. I'm an Idaho resident. I'm no longer a New York resident after the first many years of my life being a New York resident. Networking for sure. Um, Networking, New York City, there's no better place to network with traders, finance people than here. I would say, it doesn't hurt to try it out. I think New York City is a great city to live in for a period. I think everyone, especially if you're young, should try spending a little time living in New York City. It's an incredible city to live in. Give it a year, especially if you're younger, if you're in your 20s or something like that. Give New York City a year. Maybe that turns into a lifetime. Maybe you get a feel for it after a year. You had a wonderful experience and you're ready to get out. For me, I've lived in Manhattan almost full time from 2004 to 2020 when COVID hit. Still love New York City. Definitely have made some wonderful connections over the years here. I love the hustle and bustle, but now at my age, I just want more and more time out. Particularly this year, we had such a wonderful spring in Idaho. I really, really didn't want to come back this year. So I might work on some further changes to have even less time in New York going forward the next couple years. To be determined. To be determined. Um, yeah, but you won't you do pay for it unless you don't make any money, in which case you won't pay for it. But then you're not gonna be able to buy those drinks. From Alfred, CRWV, TQQ, Palantir, NVIDIA. Generally speaking, you're light short or heavier short? Net short. I'm net short. I'm net short for sure, and I would say I'm pretty heavy, to be honest. Um, Probably heavier than I should be. All right. Looks like I got through it all for today. I'm beat. Have a great night, everybody. See you all tomorrow for Wednesday for CPI day, for the market to go up again tomorrow. And I'll see you guys on Thursday for the market to go up. And I'll see you guys on Friday for the market to go up. And then next week for the market to go up. Have a good night.